Amazon built $60 billion plus advertising machine, but there is a future where this business slows down dramatically because people might just stop going to Amazon.com to shop. And nobody is talking about this risk for Amazon stock. Before we dig deeper into the risk, let me introduce very shortly business segments of Amazon and how the company is making money. For that, we will be using investkit.io. The first business segment is online stores, $83 billion. Here we have mostly Amazon.com. The second one is third-party sellers, 52, almost $53 billion. Here all the commission, fulfillment by Amazon and stuff. The third one, AWS, $35.58 billion per quarter. Here you have cloud computing for Amazon. Amazon is the largest cloud computing company. And the third one is subscription services. Here you have Audible, Prime, and other subscription services of Amazon. And the next one is advertising services, $13.12 billion per quarter. But for the trailing 12 months, Amazon is generating more than $68 billion in advertising revenue. The last two business segments are physical stores and others. Now let me share with you the main risk why I believe it could be totally possible that advertising business for Amazon will slow down dramatically or even start declining. If we just visit Amazon.com and we just search for microphone, and if you pay attention what is shown here, we can see entry-level mini wireless microphone sponsored. So all these three products, the seller basically paid money to Amazon to advertise this product for this particular keyword. Then we scroll down, sponsored, 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 sponsored. These four products are sponsored. Seller also paid to be able to show this product in the very top of the page. Then we just scroll down a little bit more, another sponsored one. Then we scroll down more. Okay, these are relevant products, and this one is sponsored again. And then this one is sponsored again. So you see how many sponsored products on the Amazon listings page, and the product detail page is the same, and the home page is the same. There are a lot of sponsored products everywhere. That's what allowed Amazon to generate $68 billion trailing 12 months from advertising revenue. Advertising is a very profitable business because Amazon knows everything about me. Amazon knows my searching history. Amazon knows what I added to cart. Amazon knows my browsing history. Amazon knows everything what I added to wishlist, what I was planning to buy, where I was tracking the price. Maybe the price is too expensive for me, so I was waiting for some discount and stuff. Amazon knows everything, and they are leveraging all this data to promote the products sellers are trying to advertise for the customers. So now, after we understand that Amazon is using a lot of ads on its Amazon.com website, now where is the risk? What will happen that Amazon will just stop doing all this advertising? Let me explain. Now, what happened is that we have a lot of AI agents, ChatGPT, Gemini, Claude, Grok, a lot of them. And how previously we were using this agent is we just give a prompt, we just get a response, and that's enough. But the future will be agentic, and e-commerce will not be exception. There will be agentic e-commerce in the future. So you can imagine that instead of going to Amazon.com and searching for the microphone or for the coat for your wife or for the new bag for your kid, you will be just searching in a ChatGPT. I want the black bag for my kid under $50. And after that, he will be searching in 50, 100, 200 different e-commerce platforms and trying to find the balance between quality and price, and then provide you a few options. So finally, you will not go to Amazon. You will not use that filters. You will directly give to the aggregator, and the agentic e-commerce aggregator will contact by API all those e-commerce or all those e-commerce platforms. And finally, you will finish checkout directly in ChatGPT, not leaving the agentic platform. This is a significant risk for Amazon stock because they will be losing $70 billion run rate, their advertising business. That's why for Amazon investors, this is very important to keep in mind. Now let's have a quick overview of financials of Amazon and the revenue, income, and free cash flow all up to the right. Revenue growing, free cash flow growing. net income growing, margins are expanding, gross margin expanding, operating margin expanding, income margin expanding, free cash flow margin in the recent 2 years have a decline, and I will tell you exactly what's the reason of this decline. Is because Amazon currently is investing a lot of money to build capacity to reinvest into their AWS unit, buy all those expensive NVIDIA GPUs, and that's why the free cash flow will be having a headwind in the near future. But on the long term, I believe that free cash flow margin will go back up and maybe even reaching around 20% in the future. The free cash flow was growing nicely, but currently having decline. Stock-based compensation from 2023 is declining already for 2 years, which is really, really nice to see. The stock-based compensation are included in free cash flow. So what you want to see is that stock-based compensation is a smaller portion of free cash flow. So currently in these 2 years, we can see that it's quite significant, more than half of the free cash flow. But the trend is on a decline, which is very nice to see. Amazon currently is not buying back stock and also not paying dividends. The debt is increasing, but cash is also quite healthy. You can see that there is no problem whatsoever from the balance sheet perspective for Amazon. Amazon is not buying back shares, it's still diluting shareholders, but dilution is manageable. You can see that maximum dilution is around 2 or 3% per year, and hopefully when Amazon optimize for profits, he will start buying back shares, which will be really, really nice for the shareholders. Per share metrics all up to the right, earnings per share improving, free cash flow currently have some volatility, revenue per share going up to the right. From the valuation perspective, for the PE, currently Amazon is trading at 28, but you can see the volatility for earnings for Amazon is quite volatile, the earnings, because Amazon is not completely optimized for profits. So instead of price to earnings, let us see what is with price to sales. For price to sales, it's basically average, basically medium, but Amazon significantly improved margins. So I believe it should be trading with higher price to sales. What about price to operating cash flow? Price to operating cash flow, Amazon is trading basically the cheapest it was during the last 10 years. And price to free cash flow, of course, inflated. So price to free cash flow is 300. We can just ignore price to free cash flow for now. After spending just 2 minutes learning about the company on InvestKit, we already have very clear understanding. Is this a healthy company? Is this a growing company? Is this a dying company? Now let's use projection to understand which return on investment we can get from Amazon if we invest into Amazon right now. So projection is basically the projection for the next 5 years from what we have today, which is current, to the next 5 years, 2026 to 2030. We will project the revenue growth, we will project the operating cash flow margin, we will project the price to operating cash flow, which is the multiple, and finally we will get the market cap and price. All calculation is done by investkit.com and everything is updated automatically. If you are interested to have this kind of projection, the link for the platform will be in the description below. So currently we are doing the projection for Amazon. I believe 12% is quite possible for Amazon. There are a few reasons for revenue to keep growing 12%. AWS will be reaccelerating. There are significant opportunity for international business for Amazon, and also the third-party sellers. If we could assume that advertising business will be disrupted by agentic commerce, the third-party sellers, which is fulfillment by Amazon, logistics, and all that stuff, this definitely cannot be disrupted by agentic commerce, because Amazon has real planes, real trucks, and real robots which are doing all this logistics the most efficient way in the industry. So that part of the Amazon has a huge moat and definitely cannot be disrupted by the agents. So we are projecting 12% for the next 5 years. Why we choose operating cash flow instead of net income is because Amazon currently is reinvesting a lot back into the business. So the company is not optimized for profits. That's why we are choosing operating cash flow. Currently it's trading at 16, and we will choose that the multiple will extend to 18 in 2030. The reason for that is because the margins will continue to improve from 19% to 23%. Why? Is because of robotics tailwind, is because AWS will be taking more part of the Amazon's revenue, is because the margins will expand. and the company will become more efficient because they will be able to replace part of their workforce to using robots very efficiently, delivery in the warehouses and everywhere. So if we assume that the margin will expand to 23% and the multiple will expand to 18%, what we can get is $5.23 trillion or north of $500 per share, which is 132% or 18% CAGR for the Amazon in 5 years. And now let's use reverse DCF to see which free cash flow growth is priced into the company as for now. So currently you can see InvestKit will visualize all the historical free cash flow for Amazon from 2021 to 2025, and then from 2025 to 2035, basically the future, right? It will project the implied free cash flow growth, which is north of 20%. But here need to keep in mind that Amazon was already making $32 billion in 23 and 24, and now the main reason why Amazon just did $7 billion is because, as I mentioned, huge capex to invest into the AWS. So now if we assume that free cash flow for Amazon will be continue growing from 32, we could assume that free cash flow for Amazon is already $45 billion. And if this is the case, if we assume that free cash flow for Amazon is $45 billion, then what is the implied free cash flow growth priced into the company is 20%. Now in our projection for the revenue we are using 12%, and due to the expanding free cash flow margin, Amazon will be able to grow free cash flow almost twice faster than revenue, and in this case the current price is justified for Amazon. So based on a reverse DCF, Amazon is not as cheap as when we were using the projection. That's why you need to run a reverse DCF, DCF, projection, and see in different kind of scenarios the company is cheap or expensive. And now in the technical segment of the show, let me tell you where I believe is the good opportunity to buy more Amazon shares. Of course, not financial advice, do your own research. I already have Amazon as my top 1 position in my portfolio. This is a huge position for me. I'm very bullish on Amazon, and let me tell you when I believe it's good time to buy more shares for me. So here you can see we have the trading view, and here we enable the indicator called visible range volume profile, and this indicator you can see right here. This indicator is showing where most of the shares was bought or sold. So you can see there was a trading range to bought a lot of shares in this range, and then another segment is here, basically in from 2020 to 2022, we were trading in this sideways. So lots of shares was bought and sold. And now you can see Amazon was corrected, bounced out of this level, and then corrected again, bounce again of this level. The reason why it bounced here twice is because this level is playing as a support. So now we can see that Amazon could not break new all-time high. So now it's kind of in a correction, and now we are in no man's land. So now I believe that if Amazon corrects to around $180 per share, $175 per share, it would be very good opportunity to pick up some more Amazon stock. Thank you so much for watching. I appreciate your time. If you are interested in the platform InvestKit, the link will be in the description below. We are doing beta tests now, and all premium features are free. Please come and give it a try, and let me know what do you think in YouTube comments, in a Discord group, or you can write email to support@investkit.io. I appreciate all of you guys, and see you in the next one.